quick bullet points, if you don't mind, just
Sure.
to get my head around the business that you're in. So what is the typical size, or what is the range, I suppose, size of the deals, and in terms of total dollar and total equity? Like, how's that break up for you?
Yeah, so dollar size, our smallest raise has been about 150,000. Our largest raise has been about 600,000. We hear from farmers routinely in sort of the 200,000 to 2 million range. We see that sort of as an unmet market. Anything above a few $1,000,000, there's private equity companies that are investing in those sorts of deals. Anything below a couple $100,000, one, it just doesn't meet the economies of scale on our platform, but two, it's kind of more of a hobby sort of farm. And I believe the second question you asked, the size of the deals equity wise. So that also varies from, for example, the greenhouse I mentioned in Kentucky, that was like a $14 million project. So besides the $500,000 or so we raised, there was a large single private investor along with significant bank financing. So the scale of the actual companies we're investing in can vary quite a bit.
And gosh, I'm going to sound terribly ignorant, aren't I, when I ask this question? So there's a lot of private equity investing as well in agriculture. So presumably you can pivot off how they underwrite farming to educate your investors as well, because that's a really good source for thorough, diligent underwriting, presumably.
Yeah, and in the case of that greenhouse operation, that large 14 million or so greenhouse operation, when someone else writes a check for $5 million or a bank underwrites it for $5 or $6 or $9 million, it's quite easy to convince somebody to invest $10,000, $20,000, $50,000 because there's obviously someone taking a much more significant risk that's got a lot more at stake.
Yeah, but that applies to every kind of crowdfunding. That's not unique to.
Of course, right? Yes.
It definitely helps. Right? If you were to say, "Gosh, there's no other investors and the banks won't touch it," it's going to have a hard time.
Right.
And what kind of returns? They're structured the same as multifamily and office, like a pref and a to a promote or something?
Yeah. So sort of sometimes we'll do a preferential, we'll take that promoter or carried interest of 10 to 20% in our equity deals. The IRRs generally anywhere between, there's a couple kinds of deals. If it's a sort of existing deal, or a lower risk sort of thing, we're talking, 10 to 14% sort of low double digit types of returns, which I think is fairly common in commercial real estate investing. For some of the deals we do that are more, I'd say momentum based, you're going to see much higher returns. So right now, hemp is a very hot investing field because of the demand for CBD oil is just insatiable right now. So we've done some deals with a north of 50% IRR. Remains to be seen if we can execute on those. But I looking at the projections, it seems reasonable. It's more of a, what I would see as sort of a venture type of investment, higher risk, higher return.
And exits.
Yeah.
Do they have exits? I mean, I think of farming as being, if you're investing in a lavender farmer, are they ever going to sell? I mean, sounds to me, like a cottage industry kind of thing.
Yeah. So the exits is something that we work really hard to do with each deal as we're in the structuring process, and that is where I sort of fall back on my real estate investing development experience, where traditionally you bought a farm investor is going to buy a piece of land and sit on it for decades, if not generations, and pass it down to their family. That's just the way most farming has worked. We are starting to structure these deals more like a commercial, say a commercial real estate offering where, say 3 to 5 years on average, if it's a development sort of project based on the cash flows or the potential to refinance that business, our investors are cashed out at a targeted IRR sort of situation.